Hi everyone, welcome back to 10 out of 10. Today is another segment of Money Mondays with Donna. So for today's video, I will be talking about my 10K stock portfolio. So quick disclaimer, I am not a financial advisor, nor am I a professional of some sort. I'm just here to show you my journey of trying to be financially literate so that I can be financially free. This video is going to be a little bit lengthy because there's just so much to talk about when it comes to stocks. But, let's get right to it. So I decided to do this video for you guys to show you my progress of being in the stock market for 6 months. Investing in the stock market is honestly not easy. It sounds easy, but you need to constantly remind yourself to be patient. And that most of the time, it's going to be a slow process to see the results you want. So the main reason I started getting into stocks was because of the lockdown, and I had a lot of downtime, and I wanted to find additional ways to earn money. I was really interested in those types of YouTube videos and came across one specific channel that was about investing in Canada. I noticed that this person had a course that shows you step by step in terms of how to get started in investing for beginners. And I thought, you know what, this might be better for me to just do instead of trying to learn myself by watching all these random YouTube videos. I like that step-by-step process, so I said, you know what, let's give it a try. So shout out to Brandon Beavis Investing Academy for that opportunity to learn more about stocks. And you guys can check out his YouTube channel if you want to learn more. So I'm actually trading on the platform of Wealthsimple. There are other platforms you can use to invest, like your bank or Questrade, but I like to use Wealthsimple because of their $0 commission fee. So that means I don't have to spend money when I buy a stock or sell a stock. So that already sounds appealing in itself. Wealthsimple actually gets their money from their 1.5% exchange rate. So that's just a little heads up if you do plan on investing with Wealthsimple and you do plan on buying non-Canadian stocks. If you guys do plan on investing in the future with Wealthsimple, you guys can actually use my code down below in the link or in the description below. And then you and I will both earn $10 when you trade your first $100 or when you trade $100 worth of stocks. So for my portfolio, I've really tried to diversify as much as I can by ensuring that I have at least one stock from each of the 11 sectors. So the first stock that I have is Apple. This is the ticker AAPL, trading on the NASDAQ exchange, and it is part of the information technology sector. So Apple is a company that sells things worldwide and makes a diverse amount of technology. So I decided to invest in Apple after the split when the price was more affordable. And I chose it because of the growth. So I currently have 2 shares of this. It is 3.5% of my stock portfolio, and I do plan on buying more of this because it does have that really good growth. So there's a lot of information on here. There's a lot of statistics, but we won't get too much into detail right now. But if you guys want me to do a video about that, comment down below. The main thing that I pay attention to in these statistics is whether or not they have a dividend yield. So if you don't know what that is, it's essentially a sum of money paid regularly by a company to its shareholders out of its profit. And this is usually paid out quarterly. And Apple does have a small yield, but truthfully, I'm more in it for the growth. So the next that we have is Barrick Gold Corporation, ticker ABX, trading on the Toronto Stock Exchange, TSX for short. And this is part of the materials sector. If you look at how it's been doing in the past 5 years, I'm definitely in it for the growth. So this was one of the first stocks that I bought that I saw was giving me a really good return. Right now, I do have 20 shares. It is 8.3% of my portfolio, and it does have a small yield of 1.24% paid out quarterly as well. But again, this is another stock I plan on just buying low and holding it in my portfolio. So the next stock that I have is Bank of Nova Scotia, ticker BNS, trading on the TSX in the financial sector. So you can see based off the 5-year chart when it was hit from the pandemic, and it hasn't made a recovery yet. I currently have 12 shares of this, and it is 7.3% of my portfolio. This is one of the most appealing stocks I have simply because of its dividend, which comes up to about 90 cents. And although it doesn't sound like a lot, it definitely adds up. What's great about some companies is that sometimes their dividends will slightly increase annually. And BNS is also one of them. And you can find how much dividend a company pays out by typing out the ticker on Yahoo Finance, selecting historical data, and selecting dividends. And I like to look at it from a range of 5 years to see if the dividend decreases, increases, or is consistent throughout the years. And in this case, it does show that it's been increasing throughout the years. So the next stock that I have is Canadian Natural Resources, ticker CNQ, trading on the TSX, as well as part of the energy sector. Now, this stock also has not made a recovery from the pandemic, but I'm super on the fence of whether or not I want to keep this stock, to be honest. I currently have 5 shares of it, and it is only about 1% of my portfolio. And the only thing that's keeping me drawn to this stock is its quarterly dividend of 7.43%. Now, if I do choose to hold this stock, it's definitely going to take me a while to see the return I want. One of my other favorite stocks I have is Canadian National Railway, ticker CNR, trading on the TSX in the industrials sector. And as you can see on this 5-year chart, it has amazing growth. I have 15 shares of this, accumulating 22% of my portfolio, and at one point, the return from the stock was giving me $200+. And as a new investor, that was pretty exciting for me to see, but you can't time the market. So it did end up going down as the stock markets tend to do so. And, as an investor, I just got to remind myself that I'm in it for the long run. Anyways, for this stock, it also has a 1.69% yield paid out quarterly, which came up to about 50 cents. So not only does it have good growth, but it has a respectable dividend as well. Next is Fortis, ticker FTS on the TSX, and it is in the utilities sector. So it also has a pretty good growth in the past 5 years. I have 5 shares of this, with it being 2.9% of my portfolio, and it has a yield of 3.61% paid out quarterly. I do plan on buying more shares of this as it has both growth and dividends. A recent stock that I purchased was Home Depot, ticker HD, trading on the New York Stock Exchange, NYSE for short, in the consumer discretionary sector. So as you can see, in the 5 years, it also has great growth. I only have 1 share of this, with it being 4% of my portfolio, but I do plan on buying more of this stock down the line. It also has a yield of 2.07% paid out quarterly. The next stock that I have is one of the most expensive stocks that I purchased, which is Netflix, ticker NFLX, trading on the NASDAQ exchange in the telecommunications services sector. Say that 3 times fast. Now, Netflix also has a great growth in the past 5 years, as you guys can see. And I have 2 shares of this, with it being 14.7% of my portfolio. This is one out of the 2 stocks that I have that does not have a dividend. This was another stock that was also providing me with 200+ in return at one point. So, shout out to Netflix and chill, I guess. Another stock I have is Northwest Company, ticker NWC. And no, this is not Kanye West and Kim K's daughter, Northwest. This is part of the consumer staple sector, trading on the TSX. So as you can see in the 5 years, the stock is pretty consistent and stable and recovered and outperformed itself during this pandemic. So I have 5 shares of this, with it being 1.8% of my stock, and I anticipate for this stock to be more linear like it was before, but luckily it does have a yield of 3.9% paid out quarterly. My next stock is Open Text Corporation, trading on the TSX in the infotech sector. I only have 5 shares of this, being 2.5% of my portfolio, with a yield of 1.86%. So I currently have 2 infotech stocks. one being Apple and the next being this. And I do believe that Apple is much stronger. So if you kind of compare between OpenText and Apple, I'm probably just going to keep with Apple because that stock is continuously increasing versus the stock. It's not working out for me. So I'm most likely going to just sell it. So I do have another financial stock, which is Toronto Dominion Bank, ticker TD, trading on the TSX. And just like Scotiabank, this stock hasn't yet recovered from the pandemic. I do have 10 shares of this and it is 6.4% of my portfolio. It also does have a yield of 5.19%, which is almost as high as BNS. But I do plan on selling this stock as well, as I find the yield of BNS is more attractive than TD, and the stock price is also much cheaper in BNS than it is in TD. The next stock that I have is Vanguard Canadian High Dividend Index, ticker VDY on the TSX, and this is an ETF. So for those of you who don't know what an ETF is, it's essentially one stock that holds multiple stocks. So these stocks are usually recommended for beginners and helps you easily diversify your portfolio. It's usually a safer way to invest, but I do believe in high risk equaling high reward. So that's why majority of my stocks are actually companies and not ETFs. This ETF has mainly finance and energy stocks. I have 15 shares of this and it has a yield of 5.19% that is paid out monthly. So the stock that you must have as an investor is the S&P 500. And there are a few different versions of this one, but they really are so similar, you can choose whichever. This stock is the Vanguard S&P 500 Index, ticker VFV, trading on the TSX. And this stock holds the top 500 US stocks. So if you search this ticker on Yahoo Finance, select holdings, it breaks down all the sector weightings of it to really show you how much diversification you get. So if you scroll down more, it shows you which companies it holds. So because this is the Canadian version of it, it holds the American version of the S&P 500, which is VOO. So again, exact same thing. If you select it and go to holdings, you can see all the top 10 companies it's investing in. So for example, Amazon is the third on the list. If you're not able to afford to buy a share of Mr. Worldwide Shipping's stock at 3.5K, then invest in the S&P 500 and you get a little portion of that share. So I have 15 shares of this, with it being 13% of my stock portfolio, and it does also provide a yield of 1.43%, and most investors recommend the stock. So some people will actually only hold this stock in their portfolio just to stay safe. But you can never really go wrong with the S&P 500. My second last stock is Well Health Technologies, ticker WELL, trading in TSX. And this is part of the healthcare sector. So this stock I bought recently because I saw a video from Griffin Milks about this stock and how he believes this stock has a lot of potential for growth. And you can see that from just this 1-year chart. So he's also one of the few Canadian YouTubers that I watch that talk about stocks. So definitely check out his video as well. So for this stock, I currently have a crazy 60 shares of it, which comes up to about 5% of my portfolio. And this is a new stock and currently has no yield, but I do see a lot of potential for this stock, so I am in it for the growth. The last stock I have is Walmart, ticker WMT, trading on the New York Stock Exchange. And it's Walmart. It's literally amazing because you can literally get anything there. So as you can see on this 5-year chart, it has continuous growth, and the growth is so good that when the pandemic hit, it was barely affected. I currently have 1 share of this, and it is 2% of my portfolio, and it has a yield of 1.5%. So the stock not only has great growth, but it has a good yield as well. I do like to keep some extra cash just in case I see a good opportunity to buy. Only sector I don't have in my portfolio is real estate. So I currently have Brookfield Property Partners, ticker BPYUN, in my watch list. And as of right now, I know real estate has a lot of potential, but I think it's going to be a really slow process to see the return. So I'm just going to keep my eye out on it and just wait this one out before I decide to invest. And that's it. That is my 10K stock portfolio. So I currently do not have a strategy as to how I buy stocks or how I research, but I do anticipate to have one before the year ends, so that I can be more consistent in investing and so that I don't let my emotions influence my decisions. So if you guys did enjoy this video, hit that subscribe button below to see more. And don't forget to comment down below what other money moves you want to see from me. But yeah, until next time, bye.